We'll start at the top of the hour. No, Alex, it's because I'm on vacation. All right, testing, testing, one, two, three, testing, one, two, three. The Wayne in Spain falls mainly on the plains. How is the sound? Do I need to use the headset or can I just go without it? Okay, people say good. All right, fine. Hey, just out of curiosity, can you hear the waves behind me? No. Too bad. It's quite loud. All right. Anyways, welcome one, welcome all. Welcome to Forex.Today. Please tell YouTube this is quality content. And you do that by clicking the like button, by subscribing, and of course, if you're watching the recordings, leaving a comment. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. And please thank the sponsor of the Forex.Today YouTube channel, and that is Traders Way. Please thank them by visiting tradersway.com, opening up a demo account. Doesn't matter if you have an account somewhere else, pay it back. Introduce yourself. Go to the go to tradersway.com, open up a demo. Then when you're in the back office, you can download MT4, you can place some trades, and you will see the execution speed is fast, the spreads are narrow, the swaps are big. All of these things are good. And you might say, huh, this is pretty interesting stuff. This is pretty good. And perhaps over time, they can earn your loyalty and respect and your business, okay, by doing their job and doing their job well. So, tradersway.com. Thank you very much, Traders Way. Let me move things out of the way now. This is not as easy as one would think. Okay, I got to move that out, and then I got to shift this. Wait, no, let me click that. Okay, that's up. Now I got to shift this to this. Cool. Okay, that's why you have more than one screen. All right, cool. Well, let's see. I woke up this morning and Bloomberg told me there was a 6% drop in the stock market in the last hour of trading yesterday, and that it's been down for a while. And they're wondering what's going on. And apparently, nobody had insurance on this. Nobody, meaning professional financial managers, they didn't have any insurance, and this was seen in the VIX. And so everyone thought it was up and up and up forever and ever and ever, and that nothing was coming. And it did, you know. Anyway, so my whole point is, told you so. This is why we were ready, willing, and able. Do you understand that? That more than 2 weeks ago, we were prepped for this top. We were down here. We were prepped for this top. We were prepped for this top. This is the between the Wednesdays. And here we go into Thursday, right? The day after between the Wednesdays, which you were supposed to get out. And then all of a sudden, Thursday was a massive drop. Huh. Very interesting. And apparently, a lot of people, professionals, didn't see it coming. Well, that's very interesting too. So I think we did our job and we did our job very well. So welcome to the summer. So what's going to happen now is in the next 2 weeks, these dum dums that are still in the market and they have no insurance. And by the way, insurance means they're not using options to hedge downside risk to their S&P 500 portfolio, which is like insane. So they clearly don't know what they're doing, or they're so complacent they're negligent. So they got spanked yesterday, and of course that's what's supposed to happen. So we're supposed to knock those idiots out of the market. In the next 2 weeks, you're going to have more idiots participating. Okay, and these are going to be the guys that are desperate to make their money by the end of the month, which is actually the end of the quarter. And the true end of the quarter isn't the end of the month; it's quadruple witching two Thursdays from now, usually around the 20th. So, anyways, we're gonna have some choppiness. Cool. Okay. So we're done with the month of June. We've been done with the month of June for a week now. And now it's playing shorter term games, and that's weekly and daily pivots. So welcome to the new world. Let's see if you can adjust. Okay. One thing I'd like to remind you is if we continue to have big down moves, and I don't think really we will, not like down, 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 down moves. This is people kind of getting out of the market for profit or getting back into the market for long-term investments. So profit taking. So and whatever you think the market's going to do between now and the end of the year, that's the prevailing trend, right? So make sure you know which direction you're trying to take this. So, anyways, this would be like a short-term move, but the long-term move that I would want for this is up, 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 up. So you might look at this as kind of like a fast down and then maybe a long-term up, something like that is what I would want, right? If I were me, that didn't work. Sit down. You better calm down. In sooth, I know not why I am so sad. What should I buy or sell right now? Well, if you don't, if you can't figure that out, nothing, dude. Nothing, passion. So settle down, cowboy. All right, settle down. I know you're passionate, but if you ask a question like that, you shouldn't be trading anything. Okay. So if you can give me 5 years of your life, we'll make trading much easier, much more not easy, but I mean you still have to do the job, but more clear, more thoughtful. Okay, passion. Okay, cool. So, anyways, very nice. It's a matter of timing. Here we are out of position, OOP, hit the target early, counter trend, and take a walk. Very nice. Very nice. Okay. So plan B on this would be a further reprieve, if you will. Okay. Well, so On says, I'm buying USD short term. Okay, cool. I would ask why, and you'll probably say, well, because of risk on, risk off. You said this, you said that. Well, we are now in summer, and that if that does okay, I bet you anything, other currencies will do better. Okay. So don't isolate yourself to that. Isolate it a little bit more to I would isolate it more like I do, like more macro. Your risk off for the moment. However, right? So you're not committing to a currency, you're committing to a theme. And then when you see the evidence like that, you then in the moment, in the day, let's say you're day trading, or you're going to use price action to quantify, right? Not qualify. You already know the qualify. You already know the risk off. You're interested in the typical funding pairs. That's cool. But now you're going to quantify which one here and now. And even though dollar is typically in that boat, I bet you, well, I shouldn't bet. I would be I would not be surprised if you found something better than dollar in that risk off mode. And yeah, it probably would be again, or Swiss franc, for example. Okay. Or maybe on that particular day, some other based on your relative strength exercise, maybe something random, a kiwi. You might be selling euro kiwi. I don't know, right? But you'll pick something. But it may not be the dollar, even though what you're saying makes sense to me. It doesn't. It may make less sense now than February or March, let's say, because this any downward move now is not the same as the downward move in March. You understand that? It's not the same. And therefore, I don't think the dollar will get as strong as you would expect. Okay? Because there's a difference between risk off and profit taking. People may not want to get out of dollar pairs. Just food for thought. Okay? All right. So, whatever. Let's take a look. So, this is what I drew yesterday for you guys. How did I do? Looks pretty good. Try to get that about right. I'll pull that up a little more so my mouse is not very accurate. There's sand. There's sand on the table. There's sand on the ground. There's sand on the table. There's sand all around. All right. Okay. Very oversold. Okay. Anyways, we'll leave it at that. Maybe look on the 15. Mm-hmm. Look at this. You already got it. Bow, bow, bow. Down, 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 down. Up, up. Down, 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 down. Up, up. Down, 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 down. Up, up. And then you have to watch a fib war in this a little bit. Relative strength comes after macro. So kind of what I was saying to Han, you say you know your global macro. That never changes. So you can't swing both ways. You're like, I believe in this, but I do that. That's hypocritical. So in this case, between now and the end of the year, you know if you're a bull or a bear. Done. Greg, you should have had no problem in the last 2 days. Okay? If you can log in to the website, then you're fine. Okay? So anyways, so going back to Prince, right? Prince, you know if you're a bull or a bear. And on this one, I'm bullish and it's coming down. Great. Now I can scalp. That's not relative strength. And that's not macro. It's me trading. Cool. Okay. But now you're asking relative strength versus macro. Well, my macro is solid. I'm risk on. I'm a bull. So when I hit support on really, because they're all tied together, so they're usually all basically at support at the same time or resistance at the same time, right? So in this case, when you get to kind of the right time, so let's say the London Open or New York Open, you're putting together your trade plan. You say, okay, I'm going to sell all the yen pairs today if I get the opportunity. Then, okay, Prince, then you do a relative strength. Which currency do you buy against the yen first? I look at Aussie, I look at Kiwi, I look at CAD because obviously uh, if there's a risk on market, then commodities are probably going to rally. Okay, okay, and then I look at like how's pound yen doing, how's euro yen doing. Okay, and I walk around and I do relative strength that way. Okay, out of coffee. The webinar is going to be short today, fellas. Maybe unless you'll allow me a few minutes, a couple of minutes to make some more. Whew. All right, let's take a look at this. Ooh la la la. Right on, Prince. I like it when you make me margaritas. I want it strong, don't be a cheetah. I like tequila. Ooh la la la. All right. So, anyways, boom, shalaka laka. Would you guys really? Would you wait like 2 minutes? It's one of these nasty Keurig K cup things, but it'd be less than 2 minutes. Oh, I'd need it. Oh, that'd be great. You guys are the best. You know what? You can look at the beach for 2 minutes. People pay money to look at the beach. How does it look? Okay. All right. Good enough. 你好吗？啊，你好吗？Ohio. Cool. Coffee. All right. So, good morning. Thank you for waiting. La 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 la. Let's take a look at this one. Here's our WTI yesterday. Remember, we had it come up, break through, come up, and now there could be a retest. And well, I already got it marked. So mhm. Cool. There we go. Konnichiwa to you, An. For me, it's still Ohio. Here's our gold. Check that out. This is what we drew yesterday. La 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 la. Yeah, okay, it's not perfect. We can right? It's not perfect.
That would have been on the mean. It should be there. You know,
In fact, I can just kill that. Okay. So let me back out so you can see it. You have to decide whether you are breaching, okay, the upper bound. That's not it. That's it. Okay. So we're looking at this here. Morning, Master Trader, but this is Wayne. This isn't Grant Cardone. All right. So you see, upper bound, little little on the pricey side now for buying. Obviously, you want to buy low if you're a buyer. No, I'm kidding, Master Trader. Oh, thank you, Anthony. 3 people hit the like button. That's cool. Red on blue. I'm blue. I'm blue. I am blue. I'm blue. I am blue. I'm blue. I'm blue. So did we not cover one of these? Oh, our kitty cat. Ooh la la. Now that is getting punished. That's the odd one out, huh? Hmm. Hmm. I'm gonna have to pay attention to this one. Why is it doing that? W to I? No, that's out of proportion. Yeah, so CAD is getting crushed. This one, be careful. We lack the congruency on this one. AKA going the wrong way. All right, so that one's weird. So watch your CAD, man. Hmm. Okay, okay, okay. Oh, oh, oh. Yeah, Aussie's maybe worse. That's cool. Cool. There you go. So that's interesting. And then on the short run, you got to watch that. So that's why this here is based on a change in trend, and this light gray area is July's buy zone. It's a little early, I know. It's gonna be about the same. Oh, looks like my battery's dead already. No kidding. Huh. Well, it looks like I only have 6 minutes left. Oh, dang it. Let's see if I can squeeze one more. Let me say goodbye in case I get knocked out. 6% on the battery. So uh, have a wonderful weekend. Thank you for being here. Please like, please subscribe, please leave a comment, and please visit Traders Way and let them know you appreciate these webinars. Do one more. I want to change this though. La, 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 la. Okay. There's the standard deviations. And of course, we got a breach to go higher high and then down into the higher low. Cool. Cool. Right on. Let's do it this way. Have a wonderful weekend. Peace on earth. May the pips be with you. May your profits be above average. Thank you, guys. Cheers.